Welcome, ladies and gentlemen, to the Daily High with your host, Matt McGregor and the Tone Vase. Good morning, mate. How are you?
Morning. I'm good. The price has, is in this weird state, but did some great hiking yesterday. Follow me on Instagram. I gotta start posting to Twitter again. I think my shadow ban's finally over. Just too many social media. But I did post to Instagram, so check that out. And I'm sure you're gonna have a million posts when you're off to fight next week.
Yeah, guys, follow me on Instagram. It's alpha.blackbox, alpha.blkböX. Big fight come up in Singapore in like a week from now. It's going to be massive. And there's heaps of really big people on that card too. It's free to watch on YouTube. It'll be a really fun event. All right, tonight's going to be another quick show because the price hasn't moved. And, it's getting late here as well. So let's just barrel through it. I'm gonna go the opposite way. I'm gonna start on the 4-hour time frame and work my way up. So in yesterday's show, we were talking about how it's a potential buy here off the green diamond on the 4-hour time frame, and the price had rallied somewhat. We're about 113 I saw last night in the show. It has done nothing much throughout the day. I don't know if you can see that. There was another green diamond today at the lowest point. And the price did recover. I mean, these are all tradable events, guys. Like you don't know where it's going to stop throughout the candle, but even just from the close, that's it's not that much. It's under 1% move, right? But so I'm still not keen on the price. This fade that we're currently having right now, I don't think this MRI support resistance at 111,500 is going to hold, Tone. I don't think it's going to hold. I think this price has faded. This rally was dog shit, under 1%, as we've just shown right now. Nothing really special coming in on the 4
let me ask you this. I mean, you're getting a pair of green diamonds here. I know they're not showing up in the green wave. They're showing up in the red wave.
Yeah.
But those two green diamonds aren't giving you some confidence that that MRI can hold?
No, in fact, that's why I developed the green and red wave, because there's a big difference for me between green diamonds inside the green wave, especially early in the cycle when we get these green diamonds inside the green wave, particularly the first re-entry that you get once the wave is green. As you can see, I'm pointing them out now. These are all buys for me. Like you see another one right here. Fantastic, right? These are all sensational buys, because the wave is green. So my macro mindset is bullish. I'll show you what happens when the wave is red. If we just go back in time a bit, a couple of good, maybe slight examples here, another one down here. But so often, okay, maybe I have a point, even though these ones have turned out all right. So often they can just keep going. Like, it can just keep going forever. Where like the green diamonds, I'm still like really macro bullish. Like these perfect ones here, absolutely magic. There's just so often when the price collapses that you'll just print green diamond after green diamond after green diamond when the wave is red. Yeah, look, that's why I said they're worth a punt, because you're still getting bloody good signals here. But I'm just not into it. Shit, I've just shown you examples of like these green diamonds being fantastic inside a red wave. But you get my point. Like you get a lot of this where it comes down, gets the green diamond, fantastic. But then it just fades and goes down way lower, right? So like the next one was good, but you just can't keep. This is why that when the wave's red, you can cut yourself to shreds. You can death by 1,000 cuts by taking these trades. They're like buy the dip forever. It's not for me. When the wave is green, I'm happy to buy the dip. When the wave is red, I'm looking for something more substantial, and I don't see it right now on the 4-hour time frame. Did that make sense, Tone? Did that answer your question?
It did. It did.
Yeah, thanks, mate. Look, the daily for me is really dangerous. Today, the candle closed below all three, the 7, the 50, and the 30 moving average. Okay, we had a slight bounce today. It means nothing for me. We're still currently under all those moving averages. It's rolling over on the daily time frame as well. The 7 simple is rolling over. I'm not bullish, guys. I do see there's a case to be made that in this zone between the low of 108 and current price at 112, for sure there's a possibility that we'll put in a low here, putting in a higher low, and then recover. Absolutely. But it's too risky for me. I don't like it. I don't like it at all. This thing's rolling over. I think that we've got a high chance of getting inside the red wave on the daily down here, sub 104. That's the way my bias is set because the wave is red. Finally, I'll just finish. I'm going to go the 3-day. We don't look at that very often. And the 3-day is a banger for me. I love these like bullish crosses where like the 7 crosses the 30 simple moving average on the 3-day and then just closing out, getting out of those trades on the inverse when it crosses. I look at these all the time. This was a big part of how I started trading, like buying the 7, crossing the 30 on the 3-day, and then just closing it out when it did the inverse cross. And right now we haven't had that recross yet, and it looks like it's rounding off. It's just missed it. Damn. I'm seriously thinking we've got lower to go on this thing. And then I tell you what, I'd be bloody excited to see a green diamond on the 3-day time frame if we can get it on the. That would be what I'm looking for right now more than anything else. I won't go through the weekly. I'll just glance at it, but there's nothing else to say that wasn't said yesterday. Not good. I don't like it. And I don't want to know about it. Hey, this is the last day to sign up. My voice is husky. For this great Blowfin sign-up bonuses we have. This is just classic, man. If you want to get into trading and you're in a non-KYC location, I don't see any reason why Blowfin wouldn't be your go-to. I think it's the best exchange out there, non-KYC. Of course, we have all the other great exchanges like BitGet as well if you don't care about KYC, and that's, I think, the best exchange in the world. Hey, Tone, I'm back with you now. Guys, all those short trades I put on, those altcoins, they are all looking really good now as well. I posted all of them in the Discord group in their own separate channels. I posted with the entry, what I'm doing. If you're not over there to check that out, you're really missing out on a fantastic community that has live trading in there as well. Tone, what do you see, mate? Am I way off base? Like and subscribe, share it with your friends. You know the drill.
All right. I just happen to have my travel schedule up. I am off to Colorado tomorrow. I will be at an event at Observer Ranch. Check out what this is. I find it very interesting. And then I'll be heading over to Mexico for some scuba diving and BitFit games. I will fill out my October travel schedule through Latin America sometime later this week. Okay. So a question showed up in the live chat because you're not looking at the live chat, Matt. Yep. The difference between the red and green wave, and let me answer that. And just so you guys know, the top of the green wave is the 200-day moving average. It's just kind of gives you that extra information. So that's useful. So you see that we're sitting right on a 200 moving average now. That by me having alphanumerics on my charts, I don't need to display the 200 period moving average because it's the top of the wave. It just makes it easier to throw some more moving averages on. And it uses the indicator of lucid SARS or just SARS. So it was originally SARS as an indicator created by Larry Williams. I actually have his original book from 1970s that made the SARS. And then there is a concept of lucid SARS from Lucid Investment and Tyler Jenks. If you are curious about Tyler Jenks' work, the Hyperwave YouTube channel still exists. Oh man, I still need to make some more videos public on that. And Matt has slightly modified it. So now it's called a modified lucid SAR. And I have other ideas on how to modify it. So there could be one more modification. I was going to make it a SAR, a toned SAR, which is going to be a little bit different as well. So it has to do with these little dots right there. The dots on my charts are very small. The dots on Matt's charts are way bigger. And whenever that lucid SAR is breached, the wave flips. And right now, the upper lucid SAR is at 123,000, but it does come down over time. And the faster the price goes down, the faster the SAR comes down, or the modified lucid SAR comes down. Anyway, if we go up today, we got to get all the way to 123 to flip the wave green. I explained that right?
Yeah, no, that's perfect, and I really appreciate you saying that, Tone. There's nothing. Alphanumerics is that the indicator with the links in the description below for 30% off is basically it's just Tyler Jenks' work in a sense with my own sort of take on it. I was a student of Tyler Jenks as I was Tone Vase back in the day, and I was using this myself. I built it. And I only released it after Tyler passed, and I sort of felt like the work, especially like with the Copic curve as well and the phantom signals, stuff that I learned from Tyler that just there wasn't anybody else talking about. So I felt to carry his torch and to preserve his legacy in that sense. But it's a lot of just Tyler stuff, The green diamonds are mine and the moving averages are mine, but it's,
I'll say one more thing on trading in general. There is an infinite number of ways to trade, okay? The best way to trade is to take advantage of something called arbitrage. You find, some kind of advantage in the system, and it has nothing to do with technical analysis. You found an advantage. It occasionally can use technical analysis. Now, another common way to trade or a challenging way to trade, is to literally come up with your own unique indicator. This is what people like Larry Williams did for a living. Like most of the indicators you guys are familiar with, like the ADX and the SARS and many others. I already forgot them all. Like he's created more than a dozen indicators. I don't think the RSI he created, right? So you can create your own brand new indicator.
John Bollinger, another one.
Bollinger, right. And a lot of people, name these indicators after themselves, right? Tom DeMark, though that one could be a little bit more debatable. But you can create an indicator and name it after yourself or name it after or make up a name. But another way to trade is because there are now hundreds of these indicators. If you combine a few of them that you use, you can combine them into an indicator, right? So that's what Matt did. He didn't create any new indicators. He was using 3 to 5 indicators, and he basically said, hey, why don't I just combine these 5 things that I really like into one? And alphanumerics is that one. And as you combine them, you may have to alter them slightly. Like, hey, I'm going to modify this lucid SAR a little bit. Okay.
And just to throw it out there as well, Toad, if you want to pay for an annual subscription on TradingView, it costs like $1,000. It's very, very expensive because the standard version of TradingView, you're only allowed 3 indicators. So by taking alphanumerics forever, you've got the benefit of everything that I look at, sort of 5 indicators all built into one indicator that you can put on your screen there without having to have a pro annual subscription as well. So that's another great benefit of that.
Okay, anyway, let's get on with the charts. The monthly chart.
It didn't mean to be a bitch. It just turned out that way, right?
I know. The monthly chart, not much to say on this. Really want to see us close at a brand new monthly high. We only have about a week to go. Is it possible? Yes. Is the probability going down on that? Also, yes. Now, the weekly chart, while it is concerning with currently trading below the prior candle's low, with the prior candle being a reversal candle, we have supported with a moving average, and the MRI is still in a positive count. So we're not in trouble yet, but we can be in trouble starting next candle. So next candle, if next candle is another red candle, we will now start to turn into a red 1 count on the MRI, which means that a red star candle is not that far behind. And just like I absolutely love multiple green star candles in consolidation to bring us to the upside, like you see it here, and the third one, like took us up quite a bit. I also don't like multiple red star candles in consolidation. And you can see how, let's just skip the first red candle. The second red candle brought us a very bad week after that. And then the third red star in a row brought us a really bad week on that star, followed by more downside the following week. I mean, yes, we didn't go all the way down, but this is still not something you want to be long in the process of. So if we get another red star candle 2 weeks from now, that is not something I want to be long during, and possibly even be comfortable in a short. So while the weekly is not in trouble yet, it has all the signs of getting you into trouble in the very, very near future. Now, the daily. If you guys recall yesterday's video, I stated pretty clearly that if we can rally back above both of these moving averages, we can still be okay and challenge these swing highs. And if we don't rally above those moving averages and we close below moving averages, I'm expecting lower prices. Now, technically, that's all I expect. Like I'm not going to make predictions off of one candle, what's going to happen at the end of the year, right? Because the further away you go, the less confidence I have in my, I guess, predictions. But once this candle was closing below both of these moving averages, I have a very high probability certainty. And nothing's 100%, but my high probability is because we closed lower than both of those moving averages, I am now expecting the low of that candle to be broken. And the low of that candle was broken, okay? Now, that doesn't mean that we're going to close below the low of that candle. We can, and I'm going to say the same thing now. At the moment, if this candle closes green, like if this candle closes exactly what it looks like right now, at 113 or above, my highest probability assumption is that we are going to rally into these moving averages. So if we close this candle green, I will be expecting to break this candle's high tomorrow. Just like I was expecting to break yesterday's candle's low on today's candle, which actually happened. I don't know if it reversed at 10 a.m. We can check that out. However, if this candle is a red candle that closes right near this 128-day moving average, my expectation for the following candle is going to be the same as my expectation was for the current candle. I would expect a break of current candle's low, right? So I just wanted to point that out, that your most, I guess, highest confidence expectations are not what's going to happen a week, a month, a year from now, right? It's what's going to happen in the next 12 to 24 hours, okay? And I have no idea where this candle is going to close, but based on this candle's close going into like 6 p.m. Eastern time, 7 p.m. Eastern time, I will have an expectation of what I expect for the next 24 hours. And that's how I would set up my short-term trade with proper stop losses in case I'm wrong. Okay. Was that clear, Matt, the way I explained it?
Very, very interesting, mate. And I completely agree. Fantastic. Fantastic analysis.
So based on the fact that we fell a lot yesterday, I would not be surprised at all if we can rally back to 114. But rallying back to 114 does not get you to the new swing high. So that's why we're going to play it by ear. Let's go and take a look.
In fact, that 114, you'll notice those, like with moving averages like that, the average punter will be like, great, we're recovering. And the big trading houses are like, great, we've just had a throwback to the breakdown point, we're shorting. Do you know what I mean? Like the same point where you start to feel excited is the part that you shouldn't, to be honest, you know?
Right. And we got plenty of room to go up without breaking the negative MRI count. But I'm already thinking 5 days ahead. And the one thing I don't want to see is I don't really want to see an MRI buy in consolidation. I mean, look, it happened here and we recovered very, very nicely. and this was an MRI in consolidation, even though we did crash on candle number 6. So it's not as consolidating as if we go back to 114 and then print the MRI buy. Let me move this out the way. And then print an MRI buy down here at 112. Like, I don't want to see an MRI buy at 112. If I see an MRI buy, I'd rather see it down in below 110. But I also don't want to see it down below 110 because then we're going to be below 128. So we got some conflicting signals here. I would rather have us hold the 128 and not print the MRI buy at all. I would rather have us break the MRI count, consolidate above 114, and get a green star candle around 115, 116, and that would make me very, very bullish.
Yeah, I think you got to stick your hands in your pocket until at least 117, perhaps even. Do you know what I mean? I just don't see it right now. Look at that.
So, Matt, you talked about the 4-hour chart, so I'm going to skip it. I will go to the 1-hour chart. The 1-hour chart is not that interesting because we haven't had any MRIs on it. So I'm going to go to the 10-minute chart, and I'm going to check when. It's the one thing that alphanumeric kills me, because you have prints like so far above and below the price on low time frames that when I double click the price, it always like shrinks my thing. I'm so not used to that.
What on the low time frames, it's not what we use it for, you know.
Yeah, because if I turn the MRI off and now I double click my when I turn the MRI, the alphanumerics off, and I double click the vertical scale, it gives me a nice chart, right? So I kind of like that. But when alphanumerics is turned on, I'm like, damn it, I can't see the price.
Slides it all wrong. Yeah.
So here's the 10-minute chart. Let's see where the 10 a.m. reversal actually did come in to the downside, and then we reversed again at 11 a.m. This is common. This is why when I used to take the 10 a.m. reversal trades, and they would move a lot in my direction into 11 a.m., I would significantly tighten up that stop loss, because a reversal at 11 a.m. after a big reversal at 10 a.m. is very, very common. So this is common, and I do like the fact that we are rising here. So now that I'm sitting on a 10-minute chart, this is not bad. I'm going to go to a 15-minute chart just to consolidate the candles a bit, not something we look at often. And I'm going to draw my best fit line here. Actually, I don't need to draw a best fit line. We have an MRI extension right here. Man, if we can get this price above 113,400, I think we can rally into that 114. And if we get to 114, anything can happen, right? If we can close this candle more than halfway up yesterday's candle, that's a decent sign. And I know I'm going to be, again, I kind of have my rosy bullish glasses here. If I go into a 2-day chart, if we can get a massive doji here on a 2-day chart, not doji, sorry, hammer. We can get a nice hammer on this 2-day chart, even though it's a red star. I would be a little optimistic. Like we're on the verge of a breakdown into, significant lower lows, but on the verge of a breakdown is not a breakdown, right? We still have a chance.
Yeah, you're being pretty positive, mate. You're forcing it.
So let's see what happens. We'll try to bring you a show tomorrow. If not, definitely a show. We
had a great question. Can you have a look at Max Payne, mate?
I look at Max Payne every now and then. Let me see where it is. Max Payne is probably above the price, so that should. Current price is, which color is which here? Is current price red or is current price blue? Max Payne is in red, right? So Max Payne is actually above the price, so that should help us going into Friday. Okay, real quick, I really like where gold is right now. This is great. So, as you guys know, the MRI top candle is an area to take your profit, but I consider a good, exit of longs or potential shorts on the candle before, the candle of, or the candle after. And whichever of these three candles is the biggest candle, and of course you don't know that the candle before is going to be the biggest candle. But if the candle before, had taken us to say up to 4,000, I can make the assumption that that's the high, right? So you can kind of use common sense here, right? So the candle before was the MRI top was not a huge candle. The candle of was not a huge candle, but not a reversal candle, not a candle of weakness. So if this candle is our blow off top candle, the closer current weekly candle on gold gets closer to 4,000, the more I'm confident that gold's going to pull back starting next week. Now, keep in mind, the monthly chart of gold is getting that blow off top candle on candle number 6, which is several candles below. So I still think there are more highs in gold coming later this year. However, I also think that this week is very likely to get a top in gold and pull back, which, again, I'm going to be extra bullish on Bitcoin here for no reason whatsoever. There might be a rotation from gold to Bitcoin if gold starts to pull back. Silver is very, very similar to gold. I'm not going to get into it because the show is running long.
There was a really good question. They want you to look at backwardization. How confident are you about explaining backwardization and contango? We might save it for another show.
Yeah, it's got to be another show because it takes time.
Yeah, it does.
But on what asset? On Bitcoin or on gold?
Bitcoin, yeah, with the futures.
We need to pull up the charts. Maybe I have some saved in my saved list. I'll try and see if I have a chart to show that.
Thanks, bro.
But yeah, it's explainable.
Good. No, it's a great question. We'll have a look at it another time because we got to go now. But yeah, I
really don't see. Backwardation and contango. As my guess, it's basically the difference between the spot price and the futures price. And in my experience, those discrepancies only happen at massive swing highs or swing lows.
Right.
We've been in such consolidation that if there is backwardation or contango, I would be surprised. Like these things don't show up in consolidated markets. And we've been in a consolidated market all freaking year.
Yeah.
So I just don't see them being very useful right now.
Yeah, I agree. You'll see it in great flash crashes and blow off tops. It's really pronounced.
Right.
All right.
S&P, another swing high, and it's very disappointing that Bitcoin is pulling back and very strange. One day there might be an explanation, but Bitcoin doing this while S&P is doing that, very, very strange. All right, and on this note, we got to call it a day. It's been a way longer show than expected.
Yeah, we will look into the backwardization, mate. I just haven't looked at it yet, but you might be right. If you're bringing it up so firmly, there must be something there. But we'll do it another time. I gotta go.
But it also has to be significant. Like it needs to be, beyond 5%. Like it needs to be closer to 10%. Like there has to be a significant difference. If you look at Bitcoin historically, it needs to be significant. It can't be like 0.5% because the markets in Bitcoin are not as efficient as the markets of, say, gold or silver. So for those markets, 1 or 2% may make a difference in backwardation or contango. But in Bitcoin, it needs to be way more pronounced. It can't be like barely into one or the other.
All right. Thank you, everybody, for watching. It's been an absolute pleasure to see you again. Tomorrow, we might not be able to have a show. It's a traveling day for Tone. But we'll definitely see you Thursday, and hope you have a lovely weekend.
All right, let me hold on. Bam. All right, cool. All right, guys. Thank you for watching, Matt. Keep training. Good luck on your fight. And
follow me on Instagram.